The status you select when filing your taxes can affect which tax deductions and credits you are able to claim, so choosing the right status may drastically impact your tax season. While generally the filing status is based on your marital status, there are actually 5 tax return statuses: head of household, married filing jointly, married filing separately, qualifying surviving spouse, and single. Here are the situations in which you would choose each filing status. Taxpayers likely to file as head of household are unmarried individuals paying at least half the cost of housing and support for others. To qualify as head of household, you must not have been married on the last day of the year, paid more than 50% of the cost of keeping up a home for the year, and a qualifying person lived with you in that home for more than half the year. Now, let's say you are married. Are you married filing separate or married filing jointly? Most married couples file as married filing jointly. Both spouses must report combined income and all deductions on a joint return. So this is the more time and cost-effective option for couples who are comfortable sharing their finances and tax burden. These married taxpayers may face lower tax and higher standard deduction than if they were to file separately. Next, couples who elect for married filing separately are typically married high earners who want to each be responsible for their own tax. Each spouse reports their own income, credits, and deductions. If for some reason your partner's financial status or tax liability could negatively impact your return, married filing separately is a route to consider. Keep in mind, however, that this filing status has special rules and may disqualify you from many popular tax credits in addition to a higher tax rate. This is why it is important to work alongside a knowledgeable tax accountant so they can compute whether your best tax strategy is to file joint or separate returns. The fourth status is qualifying surviving spouse. For married taxpayers who recently lost their partner and are still supporting a child or children at home. Know that this status option expires after a period of time. If you become widowed within the year, you can still file married, jointly, or separately for that tax year. After that, the widow or widower has up to 2 years to file as qualifying surviving spouse, unless the taxpayer becomes eligible for another status through remarriage or a change in dependents. This special status allows the surviving spouse to take advantage of joint tax rates and the highest standard deduction. Last but not least, if you are unmarried, do not have any dependents, and do not qualify for any of the other filing statuses, you would choose single. Remember, a single relationship status does not guarantee a single tax filing status. For instance, a divorced taxpayer with dependents may be single, as in not in a relationship, but would not qualify for a single tax return. It all comes down to December 31st. If a taxpayer is unmarried on the last day of the year, they are considered unmarried for that whole year. As straightforward as it may seem on the surface, there are qualifiers that can complicate choosing the right filing status. The wrong status could cause you to miss out on tax breaks or place you in the wrong tax bracket, which ultimately changes the amount of tax you are responsible for. With a CPA on your side, you can be assured that your best interest and lowest possible tax rate are properly handled and prioritized. If you have any questions about your filing status or about your tax return in general, contact an Alloy Silverstein advisor today.